Assalamu alaikum wa rahmatullah. Welcome everyone to Engineering Economy. Today we will talk about the part 2 of chapter 15, cost estimation. We will cover today the second type of costing methods, which is the indirect cost or the indirect cost methods. The indirect methods, it is carried on when the production or a process in the service delivery that are not easily to track or assignable to a specific functions like a human resource or management or quality assurance or IT services. These are examples where indirect cost can appear. If we compare the indirect to the direct cost, the direct cost will be related to the production in general and associating with the number of production, like raw materials, machines. Those are considered to be a direct cost, but those are a specific jobs in the organization and indirectly related to the cost of the organization. Usually the indirect costs make up a significant percentage in the total overall cost, from 25 to 50%. So a minimum of quarter of the total cost comes from the indirect cost. And these are example of the sources of the indirect cost. The methods that is under the indirect cost consist of two methods that we will cover. There are many others, but we will cover only two methods here, which are the traditional method of the cost allocation and the ABC method, which is the activity-based cost method. The traditional or the cost allocation method is the most common to be used in the indirect method compared to the other one, and it is basically depending on the specified base or specified rate that is calculated to find the indirect method. The formula for the indirect cost method is the indirect cost rate equal the estimated total indirect cost over the estimated basis level. An example, if we have the total indirect cost for the machines are 50,000 for each of the machines here, and then we have the basis level, which is the labor cost and the labor hours and the material cost given in the allocation basis. The estimated activity level, or they call it the estimated cost level, is given here in this column for 1,000 for the labor, 2,000 for the labor hours per hours. This is 2,000 hours of labor working time, and the $250,000 for the material cost. To find the rate, in this case, we need to divide the indirect cost for each machine divided by the basis level for each machine. So machine 1, the basis level or the allocation basis is for the labor cost. So you divide the indirect cost based on the allocation basis level, which is the 100,000, to get $0.5 per the labor. It will be the cost per the basis level for the labor cost. It will be 50 cents for the labor. For the second machine, When you divide the indirect cost over the 2,000, you will get $25 per hour for labors, for labor, and for machine 3, since the basis was the material cost. So when you divide the indirect cost on the basis of the material, it will be 50,000 divided by 250,000, which will be 20 cents or $0.2 per the material cost. It is basically you have either one of the sides of this formula need to be found. In this case, or this example, it was given the indirect cost and gave you the basis level, and you have to find the rate, which is this side of the equation, when you divide the cost of the indirect divided by the basis that is being estimated from the factory itself, to find the rate for every aspect in the case study. There is another example we can have. Here, an example similar to something we covered in break-even analysis. When you have two decisions or two alternatives, when you have make and buy decision, and you want to make the decision based on the cost, not the quantity, the buying option here was given as the annual worth equal 2.2 million per year. Here we can see now again the annual worth analysis. It can be implemented in the traditional allocation method. The making option has a principal cost 2 million, salvage is 50,000, and the number of years is 10, and the interest rate is 15%. Gives you the also information that is the direct cost of 800,000 per year are detailed below, and the indirect cost rates are established by the department. When it says the indirect cost rates, that means the rate is already found. So you have this part is already found, and you have the cost itself, or the basis itself, it is found, and you need to find the total indirect cost. This table shows both the direct cost and the indirect cost. The direct cost is given and no need to calculate it. It is given straight, 300,000 for the material, 500,000 for the labor. The add of those two is equal to the $800,000 for the direct cost. But the indirect cost has different bases. We have labor, we have machine, we have another labor cost for 3 different departments. And he gives you the rate and give you the basis cost, or the basis count. In this case is the hours for the machine, for the labor, those considered to be the basis. And you need to find the indirect cost, which is basically the multiplication between the basis count and the rate, because when you have $10 per hour and you have 25,000 hours, the cost for the labor on department A will be equal the multiplication of the $10 and 25,000, the same for the machine, and the same here for the labor for department C. This is in terms of the indirect and the direct, but what about for those costs we have to use the annual worth analysis that we have covered earlier in chapter 6 to convert all these values into an annual. The buying option, it was easily given as a one value, which is the 2.2 million per year. But the making option consists of two parts. The fixed one, which is the cost given here for the principal, the salvage, and the direct and the indirect cost. The direct and indirect cost will be calculated separately and then added to the cost here from the fixed part, which is the principal and the salvage. First, we have to convert the principal into an annual as well as for the salvage. In this case, what formulation we will use if we have a number of years is 10. The formulation for the principal to convert it into an annual, it will be A given P for the 15% times 10 years multiplied with the minus 2 million. This is the annual worth for the principal. For the salvage, it will be A given F for 15% for 10 years times $50,000. And this is how you convert the principal and how you convert the salvage. Then you have to add them to each other and add them to the total cost of the direct and the total cost of the indirect, as we will see it now. The total cost of the direct labor, the total cost for the direct is already given, is 800,000, but the total cost for the indirect cost in the organization, it will be the multiplication between the rate and the count of the bases. We have the bases as the number of hours, so 25,000 hours times 10, it will be $250,000 per for the labor hours, and 25,000 for the machine hours used, times the rate of the $5 per hour, it will give us the 125,000 for the machine hours used. The same for the basis of C. You add these costs together, it will give you the 525,000. This is for the indirect cost. For the direct cost, it was given straight as $800,000. So we add the $800,000, which consists of the 500 from the labor and 300,000 from the material, the 500 from the labor and 300,000 from the material, plus the 525, which is the indirect cost, that will be $1.325 million for the making option cost. But we have to add the other cost for the fixed, the principal, and the salvage after we convert them to an annual. We use the converter A given P for the principal and A given F for the salvage, and we add the cost for the direct and indirect with the minus sign. Don't forget that 1.325, which is million form, and that will lead us to 1.72 million. Now you compare the making option with the buying option and see which one is more economical. And in this case, the making option is more economical based on the cost factor here, that is using the allocation method. The second method that we will cover is the activity-based cost, or ABC costing method, and it is used for analysis for strategic purposes, as we will see that it requires to generate or form a definition for what is the activity that you are using to estimate or to calculate the cost. For example, the maintenance cost, the management cost, or the engineering, and that will be considered as the activity of the indirect cost based on the department or the section that where are you triggering to calculate the indirect on. And then you need something called the driver. The cost driver is, if we consider the maintenance is the activity, the number of repairs or number of POs can be the drivers. And for the management, it could be the number of safety violation or number of turnover of the employee, and so on. So the activity has to be identified and the driver has to be identified. Identify each activity in the total cost, so you can have different activity in the total cost, and identify the cost drivers for the activity. And after that, you apply the formula, which is basically the total activity cost divided by the volume of the cost driver. It is very basic formula. If we are going to use this example of the safety program, they would like to apply the indirect cost. They identify the activity as the and activity cost as a $200,200 per year, and that is for the safety program or the safety unit. Now they have to identify what are the drivers for the safety program. The first case here, they identify the number of accidents appeared as the driver. So the number of accidents considered to be the driver to calculate the cost of the safety program. And they gave you the volume of 560 accidents, and this has to be determined based on the agency of the safety program to estimate the number, how the 200,000 is being calculated from the number of accidents or the volume of accidents. Then gives you a case where you can apply this is as a reference for countries or for strategic planning. When you compare number of accidents in US plants, it was 425 compared to 135 in European plants. Basically, you divide the 200,000 over the cost driver to find the factor that is used to multiply it with the current number of accidents appeared on each alternative or each option you have. When you multiply the 425 with the rate of the activity base, which is the 357, that is derived from the formula, which is the 200,000 for the program cost or the activity cost divided by the volume, which is the 560, that will give you the ratio or the rate for the cost per accident. If you have the cost per accident, now this is the opposite or the different meaning or different perspective than the allocation cost. In the allocation cost, you don't identify the volume or you identify the activity. You only find the basis for every hour of usage, for example, a machine or labor, but you don't do identifying a driver like here in the ABC, because it is based on how you identify the driver for every program cost or every department cost, and you can identify more than one driver for the cost. And in this case, when you multiply the ratio with the number of accidents appear in the US plants, it will be 425 times the ratio of the ABC, which is the activity based. It will give you the 151,000 for the US compared to the 48,000 for the European. Imagine if we have changed the driver for the same program of the safety cost, we have to find the new driver. For example, the number of employees considered to be the driver instead of the number of accidents for the safety program, because number of employees, for example, is working in the plant, that it could be a identification for how is the safety program is running in the plant. The same cost is used, but for a different driver here, which is the employees, and the volume here, it becomes for 1,400 employees. And now you compare the cost for the US plants based on the 900 employee and 500 employee for the European plants. The 200,000 here is going to be divided on the new driver, which is the 1,400, to get the ratio of the activity based. Then you can use it by multiplying that with the number of employees for the US plants and the number of employees for the European plant. You see that how is the US allocation is being reduced when the driver is being changed, comparing the US allocation to the European allocation. In the US allocation, when we use the number of accidents, the 151,000 was the cost. When we use the number of employees, the cost becomes to 1,128, and this is a reduction when we change the driver. You can have more than one driver to the same safety program, and then you can add them up or compare them hand to hand and see where you can trigger in each facility or in each plant to increase or decrease those drivers to balance your cost. The usage of the ABC method, it is good when you have a decision criteria and you want to track a cost or you want to control the cost. But in general, the traditional and allocation method, that is more suitable in reality and real cases, because it doesn't have to have estimates for different number of drivers, and each rate will be calculated based on its existing cost basis. So the traditional method considered to be better in terms of the cost estimation compared to the ABC. The ABC is accurate when the process is in operation, but not to estimate. And as I said, the ABC is better for tracking and cost control, but the traditional and allocation method, that is good for the cost estimation. This is just a comparison between the ABC and the cost allocation method. The ABC is more costly because you will have to do an overall study for the plant or the organization in order to calculate it, compared to the allocation method. This was for this part of the indirect costs. I will show you a summary here for the methods that we have covered in the Chapter 15. Chapter 15 consists of two branches of costing methods: the direct method, which was covered in the first part, and that includes the unit method, factor method, capacity method, index, and capacity index. Today we covered the indirect method using traditional allocation method or activity-based costing method, and by this we covered the second part of the costing for chapter 15.